Hi, welcome to the Friday Chart Clinic with TradersTruthReview.com. Bill is going to be late or is not around here. So let me see, I just got a questions here. Wow, so complex. Oh, okay. What's complex? Oh, okay. Yeah. Okay, low. The screen. Oh, okay. The screen is complex. Yes, it is. If this is my real-time screen that you see, and this is what a fund manager looks like. If you want to be a good trader, you got to look at all these things. Okay, let's go on. And what I want to talk about today is just a couple of things before I start looking at the stocks. Okay, we have the market slightly down. As usual, I would not review the closing bell as I normally do that for the premium members. As well, you will see a copy of the snippet will be uploaded on Saturday morning or maybe Sunday morning. So I'll talk about the bell here. But I want to talk about today is okay. Another question here. Okay, good. Is this question was sent in by a fellow gentleman earlier on. I think Kong, yes. Kong, I think you were in the audience, and he wanted me to look at he has a question. Is grateful if you let me know what is the main fundamental criteria for selecting good stocks. Okay, he has 4 parts here: earning growth minimum, earning consistent minimum, and revenue growth minimum, and dividend yield going. Now, you can use the equity tracker to actually do this. I believe if you go to Jupiter Securities and some of the other one, I believe Hong Leong, they do have this equity tracker, which I actually use it. Let me show you if I do have one here today. You can actually do that one, but I have it on my website where you can see how I run it actually, the trackers here. Okay, you go into my website here, not this. Let me go on. Just show that you can actually use that to run it. No, under equity, they have this thing called equity tracker here under fundamental filter. Now this one won't work because I need to log on to. Okay, let me just shut this one off and bring up my. I don't know. Now the problem is I can't reach there and get yes. Okay, and I'll just show you how. Okay, so question here. Okay, Linda want me to look at 3A. Okay, all right, that's good. Okay, 3A. Now I want to look at this one here. Go on to Jupiter. So your question actually goes back to this: what are the value? Right? Am I correct? Now the question is very interesting. Is currently we are looking at potential growth. Of course, the higher would definitely be better. I mean, if you talk to a lot of businesses, as a matter of fact, one of my clients is actually a Dato, and we were talking about how business should grow, and he talks about if a business can grow year to year, 30%, wouldn't that be great? He said, wow, if a company can grow 30%, he wants to buy the company, and that's what he told me. So 30% to me, it's a very on the high mark. Now the question is, we don't want to look for one company that is doing too well, because all remember we are looking in terms of the business. Now this is an equity tracker. You can get it for free if you are with Jupiter, or you can actually subscribe to the equitytracker.com, and I believe it's about 600 or 300 ringgit a year. Now you can put all these figures in here, but I do believe they don't have one with the earnings, but they do have continuous years with the earning minimum and maximum. You just need to play around with this, and that should go to it. 2 weeks ago, on my June 2012 newsletter, actually I used the Peter Kandel investment value to talk about it, and actually pick the 666. You can look at what newsletter. Let me just look at that newsletter here. I believe I have it here. Okay, Peter Kandel, and I did talk about here, right? Peter Kandel. Just change this again to his investment criteria in here. So this is something that you wanna look at. But all right, okay, I got another question in here. Let me see. Oh, Linda, now it's already moved up 10%, so I'll let the profit run for a while. I'll get back to you on that one, Linda. You seems to have a flair for asking questions. What did your broker say? Right, Linda, you should ask your broker. Okay, yep, your broker should be able to tell you that. Okay, we'll look at 3A afterwards. So back to your questions, this one that I do have. I would actually look for at least a 5% minimum growth. If I have to key in, it must be more than 5%, right? Because if you look at it in terms of organic growth, most organic growth is only about 2%. Now, if you compare to our country GDP growth, we are talking about 4-5%, and US at the rate of GDP growth about 2-3%. But for smaller companies, tends to have PE value of 7. Then you might see growth around 10%. I would like to start with a small minimum earnings. Most of them I would say about 5% here. This one also be 5. Revenue also be 5, and dividend yield definitely I want to be more than 3%. Okay, at least a 3 to 4%, better than fixed deposit. Okay, so let me just repeat again. In terms of selecting good stocks, earnings, revenue growth at least more than 5%, and dividend yield earning by 3 to 4%. I hope I answer your question, Kong. Okay, give me a feedback if I answer your questions. Right. Alright, anyone happy with that so far? Okay, we were talking about this. Hi Tech, good to see you again. Alright, okay, good. Okay, so we are looking at it reasonable. Now the key thing is, don't look for one that is really growing by 30 or 40%. I mean, it is still a foolish, if you're just looking company that go in super growth. Now you want to catch this company as it's about to grow, not when it hits about the 30 or 40% yield. Oh, Bill is here. Alright, Bill. Alright, come on in, Bill. Yeah, Bill is here, and we are doing our thing. So that's the part. We were talking about selecting good stocks. Bill, you want to say something, Bill, to the audience?
What is this?
We are on the webinar now.
Okay,
okay, Bill's going to say. Have a seat, Bill. Yeah, just say something. Okay, they are on the audience.
Yeah, okay. Hello, everybody. This is Bill. Hope all of you are having a good week and making some money. And I would say that the market is still very resilient. It seems like foreign funds are coming in. So if you follow the blog, you can see that foreign funds are definitely coming into the market. So this is very supportive of our high-quality blue chip shares, the ones which we manage in you guys' portfolios. For your EPF and your cash accounts. So as I say, nothing has really changed. I would say that in tonight we're going to have a major employment report in the U.S. and this will affect markets worldwide. On another note, the gold market is very well supported at this level. We've had 3 successful tests, each one on lower volume of the May low. So you can look at the weekly and see this. You can look at the daily. So it seems that every time the establishment, the banks try to push the gold market down, somebody comes in to support it. So we have changed from a markdown stage 4. We had a change of behavior about 6 weeks ago. We're forming a very, very solid accumulation base, and based on the volume spread analysis, it shows that we have potentially more on the upside than the downside. So don't give up on your gold. I know the CNBC, Bloomberg, they have paraded analyst after analyst with bearish news saying that Treasury bonds are the safest way to protect your capital. Treasury bonds, fixed deposits, money market. However, in my opinion, and not just my opinion, but Soros's opinion, John Paulson's opinion, and many of the great asset managers are now taking advantage of all the extreme negative sentiment and have been accumulating, and the chart bears this out. So based on that, now is a good time to consider the ETF gold funds that we have in our managed accounts for the on the Singapore side, and we do handle those. So if you're interested, very narrow spread. And please don't go down to Pokong or Tomy Jewelry and pay a 15 or 20% premium to get into gold, and then when you want to sell it, you get chopped up again. If you come with us, the spread is only one tick. It's 0.001%. So that's a much better deal, and consider that. So having said that, I wish you guys a great week ahead, and be careful. Don't try to overexpose yourself, and I think just continue on with our dividend, high quality share strategy, and have a great week.
Right, thanks a lot, Bill. That was Bill with his gold outlook, and we all know that Bill is really a gold bug from that perspective. Ken, what's the minimum gold ETF investment? Lo was asking. Was it what?
60,000.
60,000 ringgit for a gold ETF investment. Lo, okay, you can email me and we can talk about that. All right, good. All right, what I want to talk about today is actually the posting that I've done this month here on my July report here. I know it is quite a long article that I've written for July, but I just want to draw your attention to focusing in on the Singapore market. Okay, now focus on the Singapore market. So we are pleased to announce that as of 1st of July, we are extending our coverage to include SGX. Now, those of you may also know that our Bursa Malaysia now are linking up the other two exchange, which is the Singapore stock market and the Thailand stock market under ATL, which is known as I think ASEAN Trading Link, ATL. So that would be great. So in future, when you see your KLSC stock, you would also see Singapore stock. So that's one of the reasons why this now comes more important to actually include the Singapore exchange. I mean, as an investor, the real job as an investor is look for undervalued stocks. That's what we do. And from a trading standpoint, we also look for trades that is coming up, and we are looking into those in the day by day, even in the minute by minute basis. Now, what I want to talk about is the Singapore stock market, on better known as SGX, and why we really like it. Now, if you look in scheme of things, let me just try to show you here. Okay, let me just get this back. Change the marker. Right, we have about 700 to 800 companies, and about all, if you include all kinds of warrant, we're talking about 900 to 1,000. And there are many diversified sectors to look at. We got commodities, we got banking stock that is not exposed to the euro. We got consumer stocks, then like the F&N Cerebos. That's the one who make the chicken brand essence. You can see that on a lot of the highways. If you're going up with a young boy, when he drinks his chicken brand essence and he's all awake and he's jumping all around. So that is the one we talk about. We also have the domestic tourism taxi operating like Comfort Delgro, and also in the Singapore called SMRT. That's a railway track here. Okay, they got another questions here. All right. Okay, not that one. So that's a lot of option to play it, and also there's a lot of high dividend paying companies like Boston Singapore, Singtel, Capital Corp, SIA, and also high dividend stocks. And what I do for your interest is I actually monitor them under, you can see my screen here, under SGX. This is my real time Singapore stocks in here. This is F&N Singapore Fraser, and this is the one that I actually put on. Look at this, isn't this beautiful? Let me just bring this up. Right, you got spring, you got test, you got volume coming in, you have one just made 18-day line change, and there's only one Sing dollar. Right, that's about 240 ringgit. If I blow this up again, you can see it is really trading below the 200 moving average. A big wash, a cup and a handle, with a spring, and then finally